Welcome. Today we're going to be talking about capital gains tax. What is it all about? How does it affect me as a property investor? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. This is my channel talking about property tax and accountancy. Let's sit down and have a chat. Capital gains tax. What is it all about? Now, it's probably something you've heard mentioned by many people, as it's something as we buy and sell properties that will definitely start to kick in and have an impact on your investing and selling journey within property and your property projects and ventures. Capital gains tax is the tax on any gain that you make. Now, what do I mean by that? What I mean is I buy a property for 100,000, I sell it for 200,000, and now I have a gain of 100,000, and the taxman wants his cut. Now, it's not quite as simple as that, unfortunately, because we don't really want to be paying tax on 100,000, and there are some ways to get that tax bill down. So let's have a look at a little more detail on how it all fits together so that we can make sure any capital gains tax you do have to pay is as little as possible. Now, the first thing we should probably mention is who does it apply to? Now, in essence, capital gains tax applies to both individuals and companies. However, for individuals, it definitely fully applies and there's no escaping it. Within a company, capital gains tax is arguably seen as a chargeable gain, which means it just falls within the corporation tax boundaries and there isn't a separate tax that is paid. It just becomes part of the corporation tax calculation each year. If we just continue down the lines of companies for a moment, that means the tax rate you're going to be paying on any gains within your company is going to be at the corporation tax rates, which are currently 19% and will be going up to 25% shortly. For companies, there are no allowances, so you'll pay the corporation tax chargeable gain on the whole amount, which means there are no allowances whatsoever, so it will be 19% on the whole amount. For individuals, there's a few allowances and a few things that we can consider. As an individual, you will be charged on the capital gain that you make on a property. So let's stick with that fictional example where we've made 100,000. What allowances do you have? Well, as an individual, you get an allowance of just over 12,000 for any capital gains. Now, this does include all capital gains. So that might be from property, from stocks and shares, from anything that you've made a gain on that is taxable. But let's just work on the basis for here that we've just got this property. So from 100,000 gain, we've now got 12,000 of allowances, which takes our gain down to 88,000 that we're going to be taxed on. So great news, we've just reduced that slightly. The other thing we are allowed, which is also allowed on companies as well as individuals, is any allowable expenses. So what do we mean by expenses? What we mean is any legal fees, any improvements that you've made to the property. So you might have had to put on a new roof that hasn't been claimed. So you can put the refurbishment value on. So what do we mean by these expenses? We're talking about improvements to the property. So you replace a shower, that's just a repair to the property. If you have to put in a new oven, again, that's probably a repair to the property. So we'd be looking at that from a revenue point of view. Whereas anything that is treated as a capital item, so maybe you've recarpeted the whole house, potentially you've put in a new kitchen or a whole new bathroom, or you've had to replace the roof. So you've had to replace some of these different elements. Now, on that basis, they are treated as capital items. Now, these capital items we can't claim in our personal tax return on a normal basis, which means we are now at the point where we can bring these in and we can reduce our capital gain by these amounts. So in our example, let's say we're going to have 28,000. So from our original 100,000, we're reducing by 12,000 for our allowances. We're taking 28,000 off for our our capital expenses, our improvements to the property, that takes us 40,000 off. So we've now got a gain of 60,000 that we're going to be taxed on. So that's great to help reduce those tax allowable expenses. Now we'll be doing a separate video about capital and revenue to make sure that you've got that in more detail, because it's quite a key fundamental for any property investor to understand. Having got to our chargeable gain and what we're going to be taxed on, the next stage of things is going, well, how much are we going to be taxed, and what do we have to do and when do we have to do it? So how much we get taxed is sitting at 18% or 28%, depending on whether you're a basic rate taxpayer or a high rate taxpayer. So this will depend on your personal tax position, and that's where you need to get your tax advisor involved to make sure that you can do the calculations together to get the right amounts. The when is slightly different to what we've historically had as a tax industry. Since April 2020, the rules changed, and now 30 days after the date that you complete your transaction, you need to have completed a capital gains tax return to HM Revenue and Customs. When is it due for payment? The capital gains tax is now due for payment 30 days after the transaction is complete. So if we completed on the 31st of March, we would now have to pay the capital gains tax, if there is any due, by the 30th of April. Now, this is whatever date you're completing, so it could be any date during the year. This period of 30 days also includes doing the capital gains tax calculations and submitting a return. Now, obviously, there is a slight issue here, because if you're doing this at the beginning of the tax year, you may not necessarily know if you're going to be doing anything else during that tax year. So what you have to put in as your capital gains tax return is your best guess of what you think is going to be the position. Now, this may mean you don't think there is any gain to pay, so you won't need to do a return and make no payment. However, if you are going to have to make a payment, you'll need to do a tax calculation, see what you think you have to pay, and make that payment. So if you think you have a tax bill to pay for your capital gains tax, you'll need to do the calculation, make the submission within 30 days, and make that payment in 30 days. As a secondary thing, even though you've done a capital gains tax return in the 30-day period, you will still need to include this capital gain on your personal tax return. You'll still need to include all the details and do the calculation. Maybe not again, because hopefully you'll have done it once and it will be incorporated. So that will now give you the final tax position on your personal tax return. You should therefore be able to put a deduction on your personal tax return to show the amount that you've already paid. If there's additional to pay, you may need to pay a little more. If you've paid too much, you may need to reclaim some of that capital gains tax that you've already paid. Capital gains tax can be quite a complex area depending on what you're doing. I definitely recommend you speak to a tax advisor or accountant to discuss your capital gains tax calculation, to make sure you do it right, and also to make sure you claim any allowances, improvements, expenses to get that capital gain down to a minimum. The lower you can get the gain, the lower the capital gains tax. So let's see where we can look at reducing that, and check out the other video about what expenses you can be claiming against it to help minimise those capital gains tax liabilities. Hopefully today you've got a bit more understanding of how capital gains tax fits together. There'll be some more videos on how all the detail fits together shortly, so check out the channel for any new videos to find out more detail. Please like and subscribe to the channel to check out more property tax and accountancy topics. Please comment with any questions that you've got about capital gains tax or any other property tax and accountancy related questions. Let's make tax less taxing.